Teddy Keckstedt from Forex Trading Unlocked, and we are here on January 28th, 2020 with a daily Forex market analysis for you, and we're going to take a look at the major foreign currency crosses. Before we do that, we just want to have our disclaimer up here to remind you that this is just for illustrative purposes only. And with that, we're going to go to our live action screen where we have the www.forex-trading-unlocked.com website pulled up, and from the top of the menu bar you can see the workstation icon. We've already pulled that up, and we're going to zoom past the numbers, and we already have our US dollar Mexican peso market pulled up. Now, why do we have this? Well, we've been looking at this short-term buy signal that we had triggered a few sessions back and watching how it is manifesting right now. The peso made higher move highs again yesterday. Today we're trading a little bit lower. It took out the low from yesterday. It kind of filled a little bit of the gap that it had over the weekend. And now we're trying to see what's going to happen with today. The dollar is kind of strong. It definitely had a nice little higher move high yesterday, and right now there is a little bit of a bull going on. I think it's fundamentally because of what's going on with the virus coming out of China, the coronavirus. So I would be very leery of this short-term little reversal of fortune in the US dollar Mexican peso currency cross. Right now, it seems like a bullish correction is definitely underway. Today is probably a little bit of a profit-taking move, absorbing a little bit of yesterday's market action as we came back online for the trading week. And I would be careful of seeing how this market reacts over the next couple hours. The U.S. stock market just opened, and now it's absorbing the normal daily, whatever's how the normal opening is, and then we'll see what happens as the day manifests. Now, we could easily come back down to this level, kind of where these tops were after we made this bottom, somewhere around 1878 area. And that would be a nice little buying opportunity before we make another run back at resistance. Definitely, if we take out the swing high from yesterday at 1898, we are looking at bullish momentum gaining strength and looking for a challenge of this 1903 prior swing high. Trading above there doesn't necessarily mean that this is going to be a major bull here, but see how this correction lasted here off this swing low back in, what was this, October 28th, where the market bottomed. And then it rallied all the way up into the beginning of December, and it had a nice little rally from basically where it's just a little bit above where it's trading at now, back up to 1960. So yeah, for us to have an extended correction above here up to 1920, 1940 is not outside of the realm of possibility. So we'll see how that manifests over the next couple of trading sessions into next week. But right now we are definitely a short-term bull as we ride this dollar strength wave. That right now fundamentally, it's more of a fundamental rally, I think, for strength in the US dollar than anything else, but it is gaining a little bit of momentum. We're looking at the lesser currency crosses first today because we want to see dollar strength, dollar weakness, what is really going on. So right now we see in the US dollar, Turkish lira, also we have dollar strength that has been prevalent for quite some time, and even today it's slightly higher. We're floating, going a little bit sideways, but it's grinding its way up, and we're looking for a challenge of this upper 598 area. A failure back down to this 583 area is right now not really on the table, but if it does fall back here, if we take out this last swing low here, that would be a very bearish indication that the current corrective, or the current rally that we have now, was just a corrective slide giving you the next best sell before we really start to take this market lower. But remember, right now we have a lot of dollar strength going on, and as long as we have dollar strength going on, we're going to look at this as being still bullish and looking for a challenge of this upper 598 area. So if you're looking for some of your lesser currency crosses that are definitely looking to start swinging around, I would say your peso and your Turkish lira are definitely your start. Now we're going to start going back into your majors, because here's where we got some interesting things manifesting. We have your US dollar Canadian dollar trade right now that has been in a nice rally for the past couple weeks, actually since the end of 2019. Now we have a little kind of capper going on today. We made a higher move high and we're lower. So interestingly enough, the dollar seems to be running out of gas when it comes to the Canada. This has been quite a vertical move over the past few sessions after we had broken out of this basing area. Like, look at here, for almost 2 weeks here, the market went sideways basically in a 50 pip range. And in that area, it was basically just going nowhere. absolutely nowhere, you know. And then we, like a balloon underwater, we took out that high, and all of a sudden it just really, really made things manifest the strength that the bulls really are capable of. However, if you look at this rally right now, it looks kind of like what? It looks almost symmetrical to this last correction that we had back here. So here back at the end of October, just like we saw in that other market, we had a rally that went up until the end of the year. And here, let's see how far this went. We went 1, 2, 3, 4, 5, a little more than 5.5 of these grids. So 1, 2, 3, 4, 5. So yeah, we're just falling short of being almost a perfect symmetrical wave correction as this one was here the last time. Does that mean that we're going to start to fall back on support? Not necessarily. The slope of the trend is pretty steep, so we may start to go sideways, not necessarily falling back on support. As long as we have dollar strength right now, we have to look at this as right now probably just a pause before the cause, which is right now a bullish one. And I think we're still going to get another run up towards this 132.5 area. Now we'll see how this closes today. If we get, let's say the market stays quiet the rest of the day and settles right where it's at today, well, then we would have to key off of tomorrow's trading session and use today's high as a bias where you could be a short-term bear against that. I would not want to be long or short against this high today. However, if this market holds the high today and settles just a little bit around where it's at right now, that would be a short-term sell signal that we might be on a neutral to lower trade for just a little bit, which would fit the steepness of the slope. We could use a little correction here, but we'll see. It depends on dollar strength. We've had a very strong dollar to start the week. It's likely that today we might see a little bit of a pause for a cause, a little profit taking, unless the news starts to really get out there that there's more problems going on with the coronavirus. If all of a sudden we have more cases in the U.S., let alone we know that the death toll has risen, sadly, over the past few days drastically. So let's see what those numbers are, and as the transparency holds up, we'll see how the markets react to that as well. So be mindful that there's a fundamental pressure lifting the dollar. So now we're going to look at the Australian dollar, U.S. dollar, which has been falling lower for quite some time, and today it probed newer move lows. We took out this swing high or low right here which was set back on November the 29th. This was our last base for this rally that we've been correcting off of, and now that since we've taken out this means that our bull market that we've been in is now considered a neutral market for sure, maybe even a neutral to lower market. So we're going to have to watch how this manifests. I would be very careful trying to catch a falling knife. There is a little gap here. This week has definitely seen a lot of bearish momentum manifest itself. And is it done? I don't know. It really depends on how the world reacts to these things. You got to remember, Australia is a lot closer to China than the United States is. So and any slowdown in China also hurts Australia, because right now they were looking at things being good and growing. So for right now, I would say that this bull that had existed, we had a correction going on. Now I think we have more than the correction going on, since we have made a higher move high and now we've made a lower move low. So fundamentally, at a technical aspect, we now are looking at a neutral trade at the very least. So the bull that we had is no longer in place for the Australian dollar, US dollar, at least for some time now. We'll see. All right, to stay in that same area, let's look at our New Zealand dollar, US dollar. So we have a bunch of lines going on here. So let's look at these pivots here. The last swing high here at 66.30, this is our upside bias. Any trading above here would have us back on the neutral to bullish forecast. This market had been in a nice bull trend. Now, over the past couple sessions, it has really eroded and proven that this correction that looked like it was trying to base is now pressing itself. And as you can see, that we've been watching these two swing lows as targets for quite some time. Yesterday we fell through it and closed right in the middle of that range. Today we dipped just below it, and now we're trading in the middle of it. This would be our last line in the support, last line in the sand for support. If the New Zealand dollar, which had been rallying against the dollar, even when the dollar was really strong against most of the major currencies, the New Zealand dollar, this uptrend was just severe. It just really kept on going. So you have to think that this is probably more related to what's going on with the coronavirus, so we'll watch this over the next couple days. If the low of today is taken out, then this thing really isn't a free fall, where this last swing high here at 64.67, that's going to be our potential target. And one of the big things about this target thing is even if it holds up here, this is right where we have the 64.77, this first blue line. This is a major support target also. So right here you might see a short-term bottoming action if this bear continues to press on, with this area here at 64.13 most likely being the extreme. The only reason we would see this going much further than that would be, well, obviously we would have a monumental rally going on in the US dollar, which right now we're just playing it as it is, and we're not going to get ahead of ourselves, because overall we've been bearish the dollar fundamentally and technically for quite some time. And it's only the recent news that is giving us this added boost to momentum to what has been a dollar rally since the beginning of the year. And as you can see in this market here, we started off the year and boom, we have not looked back. It's been basically lower every single trading day since the year has begun. So not too much as far as bullish outlook for the New Zealand dollar right there, folks. We definitely have to maintain a bearish posture now, which is kind of crazy because it had been so strong for so long. Now we have the US dollar yen, which has the irony of it all. The dollar strong against all these currencies, and now here all of a sudden, what's going on? We have the US dollar yen that has been falling apart, which is kind of crazy. But no matter what, the overall trend for the US dollar yen is positive. So today you can see we've had a nice little recovery after yesterday's little doji. This is a significant little sign right here. This yesterday's close, as you can see, let me put a little ellipse around here and make this a little clearer for our viewers here. Okay, so as you see this little circle that I put up, let me clear it out. Okay, so this little circle right here, yesterday's close, we made obviously a newer move low. We gapped lower, we had a neutral opening and close. Today we're stronger, so I would say that most likely you got a very good chance at this being a short-term low from yesterday, especially if the US dollar is a bull. So like while the market US dollar has been a bull for a couple sessions, it's been a bear with this market. So I think you've had a little bit of relief here because this market's been pressing new move highs. Do not get bearish this market because of the virus, because if you think about the virus, where are they buying? They're buying US dollars and Swiss francs, so they're definitely not going to be buying yen. Well, they're buying yen in Asia versus the yuan and the Chinese, so there is a little bit of support there, but overall you have to look at this as it still is a bullish trend. This is a short-term correction, and look at how violent. We've had a lot of volatility this year. So far in almost all your currencies that we've been looking at, the US dollar has been rallying pretty much straight against them since the beginning of the year. Now we have the US dollar yen, which has come back over the middle of the month. This is a big U shape, like it came up like a balloon underwater, made this higher move low, and now this is what we're doing here, is maybe setting a higher move low. So we're going to key off of this low from yesterday as our directional pivot. All trading above here keeps us in the bullish mode, and we're going to look for a play of this dollar, well, a $9.54 level. That's this caramel colored area. It's a really good chance, because this is where we had a lot of resistance before. So if this is a short-term low, then we definitely have a good shot at filling this gap right here that was set from the beginning of this week and challenging this upper resistance area. If we get above there, obviously that is a nice show of strength and would help to build the trend and keep this US dollar yen targeting higher move highs, breaching this 110 area, and then making a run for probably 111.5 up to 112 before it makes its way up to 113, because overall we are a bull for the US dollar Japanese yen. Whereas fundamentally we know that things are in a little bit of a swinging mode right now, so we'll see how things work out with that. Okay, now we're going to look at our European currencies. Now, the British pound, US dollar, we know that Brexit is just 3 days away, folks. Look at this black line. There it is. We have been going sideways into this date, even though we're trading lower over the past few sessions, but we've been basically calling for sideways action for months, and we've gotten it. You range traders are having a delight, for sure. You swing traders, it's been a nightmare. So key off of these last major swing low and swing high. So at $1.3281, this is our upper side breakout point, and down here at $1.2901, this is our lower breakout point to the downside. Currently, though, we're going to key off of the 131.72 and the 129.53 levels. These are our last swing high and lows. These are our green pivot lines right here. So we are contained within that. And even as you can see, if we ride to take it a little bit lower or a little bit higher, there's a lot of room for this market to really go nowhere into Friday. So I think that really what's going to happen is, after Friday, that's when this thing is going to be spring-loaded and ready to rock and roll. In the midst of what's going on globally, you can see that while every market pretty much has been going negative against the dollar, this one started out the year that way and overall is back on support, but it hasn't done much. It's gone mostly sideways for the past couple of months. So we're going to expect more of the same for today and tomorrow. Right now it's on its lows. That's because the dollar is strong. Now remember, the pound is one of the biggest weights in the dollar, so this helps to fuel the rally that's going on in the dollar index, which right now made newer move highs yesterday, and it continues to do so today. So we will watch what's going on here. If there's anything that you're going to look at for a play, I would say be short against the high from 2 days ago, which is at $1.3172, looking for a play on support. And if you're going to get a breakout to the downside, that's where I think your biggest play is right now as you ride the dollar bull. That would be the fundamental trade that I think you have in place, and use that last swing high, like I said, as your risk. Anything above there, you don't want to be short. That's where the bulls are going to take control again. How far they're going to go and break out to the upside? Well, if they can get a rally back up above there, especially as on Friday as we head into the new week and the weekend, then I think you might start to see the first leg up on a breakout to the upside. So one of these two is going to happen. We just don't know what, but right now I would say I would be leaning on support right now just because of the dollar bull that is in place. So now we're going to look at our US dollar Swiss franc trade. This has been a nice little buy. Now the Swiss franc has been, a bull against most of the market for quite some time. As the US dollar has been a bull against most currencies, so has the Swiss franc. The only market the Swiss franc hasn't been really much of a bull is the dollar. Now we bottomed a couple of weeks ago, and as of today, we're taking out this upper green pivot here at 97.29. We're trading just below that. That right there is very bullish on the short-term rally that we have going on, because we've made a series of higher move highs, higher move lows. We took a little breakout to the upside again today, making a higher move high. We're floating right there. This is riding the US dollar bull, because right now the Swiss franc and the dollar are the two flight to quality currencies that we have. And the question is which one will give out? Well, the Swiss is so strong against other currencies, and I want you to take a look at this to give you an idea of Swiss strength. We have the British pound versus the Swiss franc. So we know that we have Brexit going on. Look at this. This looks just like our British pound US dollar. So there you go. You can see that the US dollar and the Swiss franc versus other currencies, they're in tandem. Now look at this one. We're going to do the euro versus the Swiss franc. This is a whole nother story. This market has been going lower for a while now. Today it found some strength. Now this could be because of the fact that we're coming into Brexit, so there's probably going to be a little bit of sideways action happening with the euro and the Swiss. So I wouldn't necessarily try and catch a falling knife here. That's something you should never do. But for your bulls today, you might have a short-term bottom happening here. But look at this trend. It's been lower every single trading day basically for a month. So I would be very, very leery of trying to stop this slide that's going on here. So you can see that the euro does not have a lot of strength whatsoever. So now we're going to go back to our US dollar Swiss and see what's going on here. So if the US dollar and the Swiss, which are the flight to quality currencies out there, right now this looks like it's just a corrective rally. I would not be a bull for the US dollar Swiss just because the dollar is a short-term bull, because overall the Swiss is really where flight to quality has been going. This is very fundamental news-driven momentum going on right now. As soon as that starts to wane, you're going to see the US dollar Swiss take a dive, and the Swiss strength will come back in. So that's the one thing you got to be mindful of, is that even if the dollar is strong versus other currencies, this right now is most likely in a corrective rally. Now above where if it keeps on pressing new move highs here, this was the pivot that we were looking at 97.29. Then we're looking for a challenge of 97.61. If it can get a rally above here, we still have a shot at making a rally that goes as far as 98.5. Remember, right now this is a dollar bull going on, but eventually it's going to run out of gas versus the Swiss franc. For the most part, that is our long-term perspective. So I'd be very careful being a bull here. Use caution, keep your stops tight, and I'd be very leery of being a seller until you really get a signal. So I'd be very cautious with that trade. And now we're going to look at the Euro US dollar, which for sure is one that helps to balance our long dollar Swiss. As long as the Euro US dollar continues to pressure lows, the odds are very good that the US dollar Swiss is also going to continue to rally. So as this now this market has not made a newer swing low yet, but it is looking at this. Now this is a big deal. The Euro US dollar has been basically in a neutral but higher neutral to higher trade until the end of 2019. This market for sure has been in nothing but a downward trend since the year has begun, pressuring new move lows as we speak right now. There's only been a couple corrective up days during the whole month of January so far, and now we're resting just above this last higher swing low. So you know that as fundamentally as trends go, as we make higher move highs and higher move lows, the trend continues to be upwards. We made a series of higher move highs, higher move lows. The last higher move high was back at the end of the year, and now we are hovering just above the last swing higher move low. Should we fail from this level, we may find some support for a little bit before it continues lower. Remember, the Euro US dollar for some reason finds a lot of support between $1.08.5 and up to $1.10. So anywhere in that area, it gets really, really dicey as far as trying to manifest a really bearish slide. If this virus breakout really starts to become prevalent, and especially if it starts to hit the EU for cases, then you may start to see this Euro US dollar continue to be under pressure. But right now it looks like it's going to start to come into a bottoming phase, but don't try and catch a falling knife. Right now we are a bear and staying short this market until it gives us a reason to not be there. And especially right now as it hovers above the lows of today and is targeting right here above this last higher move low. If it takes this out, the bull trend is over. It doesn't mean that we're in a bear market, even though we are in a current bear trend. It would just take us into a neutral to lower posture, not necessarily taking us off and being overly bearish. Because remember, there's a lot of reasons for the euro to be supported, and that's the thing, is that overall it's been in a range trade for over a year, and it's just looking at the bottom end of the range again, which is what most of the currencies are doing versus the dollar. So as we've looked at all these currencies, remember to be mindful of dollar strength right now. You have a lot of fundamental things that are driving the market right now, mainly being the virus that's coming out of China. Regrettably, that this is the kind of news that does have an influence and an impact on markets, but we will see how. The good thing is that we have technology, and modern medicine is much different than it was years and years ago, even just a few years ago. So hopefully the governments around the world right now have actively been getting everything at the airports and whatever taken care of to keep things contained as well as possible. And we'll see how this goes over the next few days, but definitely because of the news that has happened over the past couple days with the numbers, I think that's where you're getting this dollar strength. It is a fundamental momentum that's going on. So if we have every little bit of ease that comes from this news, if all of a sudden there's a slowdown in the numbers, let alone some kind of uptick in how they can treat and possibly stop the spread of this virus, well, then that would also definitely start to put the markets into a tizzy, which will get ready for that swing trade. Don't be just remember, this could be a long move right now that we're going into. Hopefully it doesn't last days, let alone weeks or months. And when it does start to snap back, remember, markets go out like they come in, and this market is very vertical in the Euro US dollar. This is not that much of a range. If you look at the high was $1.1239, and now we're at $1.10 even. So you're only looking at less than $2.50 range that so far. So with that being said, you got to keep that into account as to what you're looking at. So the slope of the break is steep, but the actual distance that it has fallen isn't that far. So it just looks steep because the ranges are so narrow and the chart has gotten so tight. I mean, if you look at back here, see how it's been basically trading. This is going back to July. The high is $1.14. The low is just above $1.08. We're at $1.10. We've been trading in a $4 range for over 6 months. So take that into account when you're looking at as far as your trading expectations for sure. So right now, when it comes to the euro US dollar trading expectations, you want to be mindful of them, but still right now keep looking for more support testing as we try and figure out directions and ride this dollar bull that has been manifesting over the past couple sessions. So with that being said, please subscribe to our YouTube channel, and you will get notified when our videos are coming out, when our lessons and live streaming analysis is coming out. And also leave some comments under our video sections, and we will try to address them in our future presentations. Thank you very much. And also, you can always check us out at www.forex-trading-unlocked.com. And if you go to the menu bar at the top of the web page, you can see market analysis. That's a different page. We were on the workstation page where you can look at the calendar and do your own analysis. Now we're pulling up the analysis page, which when you toggle down to that one, you can see daily Forex market analysis from yesterday, or you can see like tomorrow we will be on our weekly TFNN spot on Tiger TV, so you can find us. This will be updated tomorrow as well. So you come to our website, check out those different things at www.forex-trading-unlocked.com. I want to thank you very much. Please always have a trading plan. Always use stops. Use your protection and be mindful of what you're doing. Treat trading as a business, and hopefully we'll have you back tomorrow for another episode.